This is Alan Bush with ADMIS. In the stock index futures, we did see some better prices in the overnight trade. This appears to be linked to a just slightly better tone to the situation concerning the debt ceiling increase and the spending impasse. Our feeling is, though, that these early gains will probably not follow through. I think we can see lower prices through today's trade and probably a trend toward lower prices in advance of the October 17th debt ceiling limit. Also, we do have the possibility that the government could run out of money by the end of the month, at least as far as the Congressional Budget Office is concerned, with comments that they're saying. So we'll probably see lower prices in that window of the most dire circumstances concerning this spending and budget impasse between October 17th and the end of the month, I think, is when we are likely to see a bottom in this market. So between now and the beginning of that period, look for pressure to continue in stock index futures. Over in the currencies, seeing the euro currency higher, even though we did have some negative economic numbers from Germany as far as factory orders is concerned. Also, we have the euro still very close to an 8-month high against the US dollar, as general business confidence in the Eurozone continues to be at a high level. Also, we had some strength in the British pound after a UK house price index coming in at very strong levels. A second day of weakness in the Canadian dollar. This after yesterday it was reported that construction spending in Canada came in weaker than expected. Also, a slightly better tone to what we're seeing in Washington helped the dollar index to advance in the overnight trade. Our feeling, though, is that these early gains will not follow through. Lower prices are likely, I think, today from these somewhat better levels for the US dollar index. And I also think that the dollar index will continue to work lower in advance of the October 17th budget ceiling deadline. In the credit markets, futures a little bit lower. This also due to a somewhat better situation as far as negotiations resolving the financial impasse in Washington. Once there is a resolution to the spending issues and the debt ceiling situation, I think the main trend will resume, which is to the downside. So for now, I think I'd stand aside in treasuries. But longer term, it looks like this market will continue to work lower as it has over the last year and a half. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.